revisiting global financial liquidity beyond central bank balance sheets and M2 money supply. 1. Introduction. The traditional models for assessing financial liquidity, especially those relying on M2 money supply and central bank balance sheets, have long been considered the gold standard for understanding the money supply and liquidity conditions in an economy. However, in recent decades, financial innovation, deregulation, and the rise of global capital flows have rendered these traditional models increasingly inadequate. Central banks, like the Federal Reserve, may control the monetary base, but their influence is now limited as new forms of liquidity have emerged outside their control. In particular, the USD-denominated global liquidity system has evolved into a much larger and more complex structure that central banks cannot fully monitor or influence. This exposition will explore how traditional liquidity measures, specifically M2, fall short in capturing the full scope of liquidity in the modern financial system. We will argue that a new, comprehensive global liquidity index is necessary, one that includes USD-based liquidity outside of traditional central bank channels, including shadow banking, offshore liquidity, and financial innovations such as cryptocurrencies and sovereign wealth funds. 2. The limitations of traditional liquidity measures. M2 money supply as a measure of liquidity includes cash, demand deposits, savings accounts, and money market funds within a domestic economy. The US M2 is often seen as a key indicator for understanding economic activity, but it has significant limitations. M2 money supply includes only domestic liquidity within the US economy and does not account for offshore USD liquidity or the increased reliance on shadow banking. Central bank balance sheets, like the Federal Reserve's, provide some insight into base money, but central banks no longer control all sources of liquidity in the global economy. Offshore USD markets, shadow banking, and repo markets are all outside the direct control of central banks. Chart 1. M2 money supply versus global financial liquidity. This chart provides a USD-denominated comparison between US M2 and a broader measure of global financial liquidity, which includes USD-based liquidity outside the US, such as Eurodollars and shadow banking. As we can see, global financial liquidity is more than 2.5 times the size of US M2, illustrating how traditional M2 misses a vast portion of the global liquidity landscape. 3. Financial innovations and their role in liquidity expansion. As the global financial system has evolved, several innovations have contributed to the expansion of liquidity, beyond the scope of traditional M2 measures. Shadow banking, the creation of credit by non-bank financial institutions, such as money market funds, investment banks, and securities firms, has introduced vast amounts of liquidity into the market. This shadow banking system is largely unregulated and operates outside the purview of central banks, yet plays a massive role in global liquidity. Repo market liquidity, repo markets, repurchase agreements are another critical source of short-term funding. These markets allow for the rapid borrowing and lending of liquidity, often overnight, by using collateralized assets. Repo markets can play a critical role in global financial stability, providing liquidity during times of stress. Chart 2. Repo market liquidity over time. This chart shows the evolution of repo market liquidity from 2020 to 2024, demonstrating how liquidity in this market has grown and how it impacts overall financial conditions. Offshore USD liquidity. The Eurodollar market, consisting of USD deposits held outside the US, is another significant source of global liquidity. This market operates independently of the US Fed and has grown substantially, especially as the global demand for USD increases. Cryptocurrencies and alternative liquidity. New forms of liquidity have emerged, with digital assets such as Bitcoin and stablecoins, e.g. USDT, USDC, linked to the USD and providing alternative forms of liquidity. Sovereign wealth funds, SWFs, countries with large reserves, such as Norway, UAE, and China, have used their excess capital to create sovereign wealth funds, which are significant players in the global liquidity market, often holding large amounts of USD-denominated assets. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 4. Constructing the Global Financial Liquidity Index, GFLI. To accurately reflect global liquidity, we need to incorporate a broader range of liquidity sources. A global financial liquidity index would aggregate USD-based liquidity across different markets, M2 money supply, US-based liquidity, shadow banking, USD-denominated lending, credit expansion, and securitization outside traditional banks. Eurodollars, offshore USD liquidity held by foreign institutions. Repo markets, short-term funding markets that provide additional liquidity. Sovereign wealth funds, USD-denominated holdings by state-run investment funds. Cryptocurrency and stablecoins, digital assets acting as alternative liquidity pools. Chart 3, Global Financial Liquidity Breakdown. This pie chart breaks down the components of USD-denominated global financial liquidity, showing the relative contributions of M2, shadow banking, Eurodollars, repo markets, and cryptocurrencies. By aggregating these components, we can create an index that accounts for the diverse sources of liquidity in the global financial system. This index would allow for more accurate tracking of liquidity trends and offer better insights into potential risks and opportunities in the global market. 5. Benefits and implications of a comprehensive liquidity index. By moving beyond USM2 and considering global liquidity sources, we can gain a better understanding of market dynamics. Improved market forecasting. Traditional models miss the impact of shadow banking and offshore liquidity, which can affect everything from asset prices to credit conditions. Financial stability. Understanding the liquidity in the Eurodollar market or shadow banking system can provide early warnings of financial instability, as these markets are often more volatile than traditional bank deposits. Global economic analysis. A true measure of liquidity, including global USD liquidity, allows for better comparisons across economies and a more accurate understanding of inflation, growth, and financial stability across regions. A comprehensive liquidity index would enable policymakers, financial analysts, and investors to better understand global liquidity trends and their potential impact on economic conditions. For example, a sudden contraction in the shadow banking system or a collapse in the Eurodollar market could indicate impending liquidity stress, even if M2 figures remain stable. This would help in avoiding financial crises and predicting market disruptions with greater accuracy. 6. Conclusion. The traditional M2 money supply measure and central bank balance sheets no longer provide an adequate representation of global financial liquidity. The system has evolved, and liquidity now operates across borders and outside of traditional financial institutions. By incorporating additional liquidity sources such as shadow banking, offshore USD deposits, and sovereign wealth funds, we can create a more accurate Global Financial Liquidity Index, GFLI. This index would allow for better global economic forecasting and financial risk assessment, helping policymakers and investors make more informed decisions in the face of a rapidly changing financial landscape. The need for a more comprehensive liquidity measure is critical, especially as global capital flows and financial innovation continue to outpace traditional monetary controls. Only by tracking all available liquidity sources across borders and institutions can we hope to understand the full scope of financial stability and economic health in the 21st century.